The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, Friday the 21st of February. Welcome back, Jeremy.
Hi, Gareth. Good to be here.
Yeah, another interesting week for the world, for President Trump, for markets, for lots of people. So how have you looked back on this past week? I'd be interested to get your take on all of those things.
Well, it's worth considering that yesterday marked Trump's first month back in the White House. We're just 1 month in. It's what everyone has been talking about. And, I think to sort of put it in summary, following Vice President Vance sort of basically telling Europe to get its house in order, Trump then bypassed European leaders and Ukraine at the peace talks that were established in Saudi Arabia, where it was made quite clear that in addition to a peace settlement in Ukraine, there were wider discussions of mutual economic interest being discussed. And it is, in my opinion, probably not a coincidence that the gathering took place in Riyadh. So basically, present in the room were the three largest oil producers in the world. So I think this tells you everything you need to know about the existent now New World Order. Not only were there not representatives from European countries or the EU, there were not representatives from, or even any mention of, the sort of accepted organisations of global relations that's been sort of established in the world since Second World War, the United Nations, NATO, or even OPEC. So it's all happening.
It really is. And I remember for a long time now, I've worried whether the UK would manage to keep its seat on the United Nations Security Council.
Doesn't really matter anymore, does it?
I'm just going to say, I've stopped worrying about it. The UN has just been clearly eclipsed in the global world order. So you're absolutely right. It's the US, it's the Saudis, it's the Russians, and soon it'll be the Chinese into that equation.
Yes, exactly. I think, it's being replaced by the projection of power of strong men acting in their economic and strategic self-interests.
Absolutely right.
And I think, what does all this mean? I think this week, Keir Starmer is going to go and visit Trump in the White House. And I would say this is pretty monumental. I think it's career defining for him, for Starmer. It's very consequential for the UK and potentially pivotal in the position of the UK in the context, in a sort of new context, as part of Europe, but not in the EU. We know Trump doesn't like the EU, and maybe Remainers would say it's not up to him if we'd rather be in it or out of it. And I'd have to agree with that, really. It's up to us, up to the UK. But all I'm saying is we have to sort of play the card we've got. And Starmer's got the card to play. And I think his opportunity this week and beyond is to become what I've heard people describe as Europe's Trump whisperer.
An interesting phrase, but maybe it is a Brexit benefit, to be able to be almost go-between or some kind of pass-through or interlocutor. That would be a useful position. And if Keir Starmer can play that well, then that could be to our benefit. Yeah, absolutely.
Yeah, I have this sort of spitting image vision, a bit like David Steele and David Owen in the old days. Starmer visiting Trump in Washington, but offering to do his dirty work in Europe. But I think effectively that is the name of the game, that he's got to go there, he's got to make offerings, he's got to tell him about how he's going to increase defence spending, he's going to tell him that whatever your plans are, that we can agree that for peace in Europe, we will play the pivotal role in making sure it happens. And you can trust us to do this. Not only are we outside the EU, but Starmer has got a strong, whatever we think of it, he's got a strong electoral mandate and he's got a secure position for the next 3.5, 4 years. So he can be of great value to Trump in this regard, I think.
this time next week we'll be able to to discuss the results, which I'm sure Trump will have told us all over Twitter by then. So we'll know.
What it seems to me is sort of on this bigger picture, and you mentioned China earlier, it just seems to me that Trump wants to sort the Ukraine problem just in the way he wants to sort the Gaza problem. He wants them sorted as soon as possible because he wants to focus on the main event. And for him, the main event is the strongman showdown with China. That's where we're headed next in a sort of geopolitical sense.
And how is President Xi preparing for this showdown?
He's been focusing internally, really. And this week he was, I think, in quite a highly symbolic event in a sort of technology conference with all the tech leaders, but particularly with Jack Ma, with whom he shook hands. And I think this is sort of all part of building or rebuilding confidence in the ailing Chinese stock market, and particularly boosting the confidence of the Chinese technology sector, which in the period that we've just been discussing, the month since Trump has taken office, and we've had the announcement of DeepSeek, the major Chinese technology companies have performed exceptionally well overnight. Yesterday, we had good results from Alibaba, where the shares were up another sort of 10% or so. But Alibaba shares, as I think we've mentioned before, are now up over 50% in a month where the Mag 7 have all flatlined or gone down in price. And despite the fact that Alibaba is up 50% in this period, it remains still under half the value of its peak valuation of 4 years ago. And most of this is in the form of a derating of the shares. So what it shows you is that when these big changes happen, in price action terms, can be very significant.
Yeah. Going back to the point about the fact that big macro or geopolitical trends filter down, they can have a huge impact when they land in one or more of these stocks. And Alibaba's no small cap stock, so some big numbers. Okay. What else do you think we should be thinking about macro-wise?
Well, gold has remained in the spotlight and ground out further gains in the week and is now sitting just below the $3,000 level. And I think it's interesting that such is the speculation about the potential for the US Treasury to revalue its gold reserves, that Trump has said he will be visiting Fort Knox in a nod to the conspiracy theorists who've for some time doubted that the gold is even there. It's interesting that the focus remains on gold, and the reason is not that the dollar and any other currency is no longer backed by gold, but in a world of inflationary concerns and in a world for investors where bonds have sort of lost their attraction as a risk-off countermeasure to equity investments, gold and other real assets have really moved more into the centre ground. So the momentum is still very much behind the gold price. So I think this remains a feature of what's going on in the world.
And we can't possibly stop talking about the macro landscape without mentioning Japan with a 4% inflation rate. Surely that's worthy of mention.
Yeah, the inflation rate for January in Japan came in way above what I was expecting last week. 10-year Japanese government bond yields have almost doubled in the last 6 months, but still remain only at 1.4%. The yen is trading in relatively narrow range still. So this is all being contained, but I would argue still remains, given the level of indebtedness in Japan and the degree to which interest rates still need to go significantly higher from here. This remains a very significant potential source of financial instability for the world, which we had a sort of glimpse of back in July last year. But at the moment, it doesn't seem to be on people's radar screen.
Yeah. If that inflation rate stays there or, heaven forbid, goes up, then interest rates have to go up a lot to bring that back to where it needs to be, which is going to cause problems domestically and with the carry trade. So there's
with the carry trade, we then find out the extent to which these low rates are being used to finance all number of other things in the rest of the world.
Yeah, some worrying numbers, but we'll keep an eye on them. Okay, good. Turning to the UK, we should probably have a bit of a chat about some of the more domestic matters going on.
So, there was no change in the UK unemployment rate this week for January, but I think the feature really was about the average earnings data, which continued to run hot, circa twice the level of headline inflation. So this is obviously in one sense good news, in another sense a headache. those rates cannot diverge to this degree forever. We got higher than expected inflation rate coming in for January in the UK. And again, these issues remain a problem for the Bank of England and reminds us of the sort of stagflationary dilemma that the monetary authorities face in this country at the moment.
Yeah.
By way of a reminder, the Bank of England has said for a while now that the path to lower price pressure would be a bumpy one, and that near-term inflation could reach the order of sort of 3.7% by this summer. I think the fear is that such a sort of bump up in inflation pressure in the UK would start looking a bit like the transitory claims that we saw in 2022 if we're not careful. And at the very least, all this is going to obviously act as a bit of a brake on the speed at which the UK can cut rates, which critically impacts the activity in the economy. Amidst all this morning we had UK retail sales for January were up 1% versus an expected 0.6%. So, a mixed picture, but one that I would say tends to suggest that rates are not going to come down quite as quickly as perhaps we thought a week or so ago.
No.
What about you? What have you been looking at in the UK this week?
So stock-wise, it's been a pretty busy week actually for progressive clients, but we've had quite a few clients reporting, and it's been a pretty mixed picture, to be honest. We had some cautious comments from Through Vision and Zoo, and then some more positive news from other clients. So Through Vision, which is a provider of effectively intelligent cameras to scan for items which are hidden on people's bodies, they had a shortfall across the board. There was a warning. In particular, they said they'd seen pressure in their customs division where they're helping customs clients scan for contraband, but they've had delays getting projects to the finishing line. And also Zoo Digital, who are involved in subtitling and dubbing for TV and film content. They've also seen difficulties closing deals or getting projects to the finish line across a number of different markets. They've been trying to recover from the US writers and actors strike. That's been a long road to recovery. And what we heard from Zoo this week has suggested that that road's probably a bit longer and more difficult than we previously expected. On a more positive note, we had a slightly encouraging update actually from Oxford Metrics Group, which is a motion and measurement business. At their AGM, they said they'd got off to a good start for FY25, so some positive news from them, and very upbeat comments from both Springfield and Beeks. Springfield, which is a Scottish house builder, they said they'd sold a pretty major parcel of land to Barratt Redrow, which allowed them to significantly reduce their level of net debt. So some positive news there and what seems to be some pretty good activity in their underlying market. So very upbeat update from Springfield along with their results. And Beeks have announced that they've added the Mexican stock exchange, which brings them to 4 in terms of tier 1 customers for their exchange offering. A very, very positive update from them. They gave a nice trading update at the same time, but a very good contract win coming through this week. So a mixed picture. Some quite difficult announcements, but also some very good news. And how are things looking macro-wise for next week in terms of the diary?
Well, it's quite quiet, but I think the big event's going to be the German elections on Sunday. And I think, as with European politics, don't expect things to happen quickly. Whatever the outcome, German politics, like much in continental Europe, is all about building coalitions and consensus. So not for them the sort of first past the post decision, which we get in the UK with the removal vans turning up at the seat of power the following morning. I seem to remember Angela Merkel's sort of departure from the scene as German Chancellor took about 3.5 years.
Very, very slow to achieve, yeah.
But all joking aside, I think the German elections on Sunday are obviously critical, particularly in the context of what's happening post the sort of security conference last week and so forth. So that's one to watch. In terms of economic data, it's quite quiet. We've got some US GDP data on Thursday, and we've got some PCE inflation data on Friday, which both can help us try and judge better the shape and direction of travel for the US economy and the likely path of interest rates. But there's so many other things going on of a political nature that it's really hard to capture the signal from the noise, if you like. And I don't think these particular data points are going to be that consequential, to be honest.
No, I think next week we'll be talking about Starmer's visit to the White House and whatever's happened in Germany. So
yes, and whether there's any gold in Fort Knox as well.
That's right, if they found it. Good. We'll catch up on that this time next week. Talk to you then.
See ya.
Thanks.
Bye.
Brought to you by Progressive Equity.